Hi everyone. In this video, I'll be simplifying and explaining the concept of the financial term EPS, which stands for earnings per share. But before moving on, I'd really appreciate if you pass me your subscribe, as it'll really motivate me to keep pushing new content. Thanks everyone. So without further ado, let's start by this example. Assume we have a group of 10 kids, and frankly, they decided to open their first lemon juice business in their neighborhood for this summer. And after the first month of operating, they made $350 in total, which is sort of great. But after they took out their expenses, they were left with a net profit of $100. So how much each one of them will end up with? Simple, we'll divide their net profit, which is 100, among the number of shareholders in this business, which is 10. So by dividing 100 by 10, we get a result of 10, and this result is the earnings per share. And that's, guys, how the EPS concept works. We divide the company's net profit by its outstanding shares, and we end up with the EPS. But when you're analyzing a company, you won't find the net profit as a ready number in most cases. You'll only find the net income in the statements and sheets provided by the company. So, you'll need to come up with the net profit by subtracting the dividends from the net income. And once you have the net profit, you'll then divide the resulted net profit by the outstanding shares in order to calculate the company's EPS. Now, let's take a corporate-based example. We'll use two companies in this example, which are Company 1 and Company 2. Starting with Company 1, which have 300,000 outstanding shares and has reported a net income of $1 million for the past quarter and paid $250,000 in dividends. And on the other hand, we have the second company that has 900,000 outstanding shares, and it has reported $1,800,000 net income for the past quarter, along with $340,000 paid in dividends. With that info on your hand, as an investor, let's calculate the EPS for both of them and see which one has a better EPS. For Company 1, we'll subtract its net income with its paid dividends, so 1 million minus 250,000. Then divide them by its outstanding shares. We'll end up with $2.50 earnings per share. Sounds good, but let's calculate the EPS for the second company before deciding. We'll do the same formula, subtracting the dividends from the net income, then dividing it by its outstanding shares. We'll end up with EPS of $1.60 only. And as you see, guys, even though the second company had a much higher net income, yet its EPS was much lower than of the first company. So whenever you're analyzing a company, do not be deceived by its net income alone. Always do the math and see if it's a good investment or not. One more thing, when you're analyzing a certain company for a comparison purposes, make sure you're comparing companies within the same sector. For example, comparing a company in the medical sector with a company in the clean energy sector won't give you any valuable indicators to whether your investment is good or bad, as the affecting factors for both of them is different on a major level. So yeah, that was it for this video, guys. Make sure to activate the bell icon, as I'll be continuing on this series of financial terms explanations for the next few months. Thanks for watching, everyone.